Hi, welcome back. So let's continue our discussion on the banking and finance um, sector in Nigeria. So in the last class, we were about to talk about the banking reforms in Nigeria. So in the history of Nigeria so far so good, there has been two banking reforms that have been very, very instrumental to the development of this sector. Right. So there was a banking reform in 2004, and then there was another banking reform in 2009. And the banking reform in 2004 led to what is called the consolidation era in Nigeria's banking system. Consolidation era in the Nigeria's banking system, because what really happened was that um, the central bank raised the um, cash, how do we call it now? The central bank raised a capital base of every commercial bank with 25 billion naira from 2 billion naira. So what that means is that the for a bank to run, you understand? So the bank needed a capital base of 25 billion naira at least. All right. So the essence of that policy was to ensure that should there be a bank run, should there be a situation where people, maybe there's a panic in the Nigerian economic system, and a lot of people are running to the bank to withdraw their money or whatever. Banks don't fail, so that's the issue. So in case there is something like a cash run on, uh, um, is it cash run now? What did I call it the other time? Okay, in case there is a bank run, all right, so banks will be able to undo that pressure, without failing, because then it was as if once people had some money, they just started banks, they started operating banks and stuff like that. So and it was not cool for the Nigerian economy to continue to move in that kind of volatile manner. So now the capital base requirements became 25 billion naira from 2 billion naira. What that ensured was that the number of commercial banks fell from 89 to 25. Then after 2005, it fell to 24. And currently speaking, I don't still know if it is as a result of that policy there. The number of commercial banks in Nigeria now, that was 2023 is I think 21. Right. But let's just say that let's just look at the immediate impact of that policy, because that's what we can it's really easy to analyze um, what's happened based on how the number of banks fell, you understand, around the period of the policy implementation. So the number of commercial banks fell from 89 to 25 and then 24, like shortly after 2005. All right, so that's what you have here. And it was not as if all the banks shut down operations. No. So what started to happen was that the Nigerian banking system sector began to experience merger and acquisition. You understand? So you have banks, that didn't have that kind of financial might, joining hands with merging with other banks, to become like one bank, with a united front, so that they'll be able to raise, that requirement, that 25 billion naira requirement for them to be able to continue to operate as banks, commercial banks in Nigeria. So that's just what you have in 2004 banking reform. It was aimed at ensuring strong capital base. The number of commercial banks fell from 89 to 25 in 2005, and then 24 later. All right, so you have 2009 banking reform. So the 2009 banking reform came in as a result of the aftermath of the aftermath effect of the 2008 financial crisis, right? 2008 financial crisis, global financial crisis. So what caused that crisis? You have think housing stuff like that. So people were taking loans to buy houses, because and the price of houses were going up, and they were going up. So people were buying houses, not necessarily maybe to continue to live in them for long, but to be selling them and making profit. So like the price of houses were just increasing, increasing, increasing like that, and people kept obtaining loans, to continue to buy houses and stuff like that. So but then it came to a point where the price of when things go up, it gets to a point where they come. That's just how market works. Is that one time the price is going to come crashing down. So the price came crashing down. The housing price came crashing down, and the amount that people used to buy their houses, is now higher than the amount that they can sell their houses for. And people have taken out a lot of mortgage, so they couldn't pay back, and that led to a lot of problems, in the global banking system. Okay, some banks went out of business. Some governments, U.S. governments, for example, had to save some other banks from going out of business, because if they were to go out of business, like there would be a lot of ripple effects on the economy. Because these people have workers, for example. So when you are laying off maybe thousands of workers, now you add to the unemployment rate of the country. So they saved the ones they could save, and some just had to go. No, and it's trickled down to other, because there's a level of interconnectedness among the global banking system. So it affected Nigeria too, and so on and so forth. So now, um, so there was this reform that happened. Like, we don't want something like this to ever happen again. And should it even happen, we it shouldn't be this bad. You understand? So the banking reform came to play. It was necessary to cushion the effect of 2008 the aftermath effect of 2008 financial crisis on Nigeria's economy, because there was a lot of non-performing loans. And when we say non-performing loans, people took out loans that they've not been able to repay between 90 and 180 days of the maturity dates of the expected dates, when the loan was meant to be repaid. So a lot of non-performing loans. Commercial banks had a lot of non-performing loans, and the implication of that is, I was explaining in the first class that is customers' deposit that used to make loans. So if those monies are not coming back, so that means there's going to be a problem. So customers' deposits, other people, because I was not the one. They didn't seek my permission, for example, to loan out some of my funds or maybe all of my funds to other people that needed the money. But now I need my money. I was collecting my money, and I need to be telling me story. You understand? So like the central bank had to come in, like it's something that to be done to ensure that consumers don't lose, to ensure that depositors don't lose their money. You understand? Taxpayers and whatever to, like, just to ensure that people don't, lose their money and stuff like that. And that led to the creation of the Asset Management Corporation of Nigeria, AMCON. So it was established in 2010 on the 19th of July 2010. So what AMCON does is to acquire the non-performing loans of a failing bank. All right. So if they've seen that the way this bank is going to fail, so as AMCON comes in and acquires the non-performing loan. So it's as if the bank itself no longer has non-performing loans. It's as if the bank itself has the money. You understand? Like the money is not outside. Like the bank already has the money, so like AMCON acquires it just to make sure that the failing bank, is still liquid. It still has enough money, you understand, for it to continue to run. You understand? And over time, some things are done. So if the bank is supposed to be sold, it's just, to kind of help reduce panic in the Nigerian banking sector, and just make sure that things go on smoothly. The public does not go into wild moments, and stuff, and things like that. So, but how is AMCON financed? So AMCON is financed by 0.3% asset value of the participating banks, on an annual basis, and it is financed by it is the CBN also finances it annually by giving it 50 billion naira. All right, so that's that about the two banking reforms in Nigeria. You can read more about them, and I may have said some things that are not exactly right. All right, so it's cool, right? So we learn every day. It's cool. Talk about it, we discuss it, and so on and on like that. So I don't remember. Now I number them. So that's one. Now next is two: contribution of banks to Nigeria's economic growth and development. Number one, you have capital formation for businesses, which is clear. So in terms of loans, all right. So I've explained that. So you have employment, people that the banks employ. You know, they have that's also kind of straightforward. Banks have workers, right? So they are creating employment for those people. And financial stability, for example, what happened in 2000, the 2000 banking reform is talking about financial stability in the banking system as well as the Nigerian economy, in total, just to ensure that things are going well. All right, things are going well. Now, number four, you have enabling industrialization, which is kind of similar to um, capital formation for businesses here. But then it's a little bit different because uh, when we say enabling industrialization, we are not just looking at commercial banks, things that commercial banks do now. We're also looking at things that the central bank is doing now to ensure that the economy develops. Okay, we've looked at the structure of the Nigerian economy and we're like the industrial sector is not doing so well, especially the manufacturing sector. So, like the central bank has, in one way or the other, stepped in into Nigeria's economy to ensure to use monetary policy tools to boost industrialization level in Nigeria. And some of the tools that that the central bank has used include the 200 billion manufacturing fund. So when you have a fund like this, it's more or less a loan, soft loan, you understand, to people that are involved, people that are supposed to get it. So you are going to repay the loan anyways. Not as if the government is dashing you money through the CBN, or it's going to be a soft loan in terms of interest rate and in terms of repayment date too. You understand? So injecting sort of 200 billion naira, that's a lot of money. And you also have 300 billion naira long-term funding of power and aviation. Of course, we've discussed it over and over. Power sector of the power sector in Nigeria is not good enough, and then aviation. So we did that in the last class. No, when we're talking about transport industry or whatever, transport sector. So they've also done that at least to improve our aviation and our power in Nigeria. So, and we also talked about Anchor's Borrowers Program when we were, I think it was, the value was 1 trillion, right? So yeah, 1 trillion naira Anchor's Borrowers Program. You know, what year was that? It was suspended in 2021. I think, what year did we even say it was improved? Was it 2015 or 2017 or something like that? Well, we know that it was suspended in 2021. People were not repaying. But at least that was an effort from the Central Bank of Nigeria to help farmers, you know, to help farmers provide raw materials for manufacturing industries, like farm products, like the agri-allied industries and stuff like that, or the agri-allied, companies. So it was also a way to ensure that, okay, resources are sourced domestically and there's a regular flow of raw materials into these companies that need those things, and jobs are also provided. Okay, the farmers now, it's business for them. Instead, so they had the government support through the CBN, and the aim was for them to provide agricultural products to companies that are going to be needing them. Just ensure a regular supply of these things. You understand? So those are ways that the central bank has come in to help. Then we have printing and issuing of currency. Now the central bank issues currencies, but the central bank does not print them. Okay, National Security Minting and Printing of Nigerian National Security Minting and Printing PLC is the one that prints money in Nigeria, not CBN. CBN just issues, all right, currency. So they issue currency, what we spend and stuff. Now, number six, fighting corruption with monetary policy tools. So you can also see that what the banking sector in Nigeria is doing is a lot. Now, and an example of that is Treasury Single Account. It was initiated by the Jonathan-led administration in 2012, and it became implemented in 2015 when Buhari assumed power. So what the TSA or what it was, I think it's still on. It's a consolidated account, a consolidated government account. So like every government revenue is to be paid into this account. Because what was observed was that there's some state governments and some people on behalf of the government were creating multiple accounts for the government that the government was not even aware of. So people were stealing from this account. So when I create an account for you that you are not aware of, so that means I have control to that account. You don't even know that you have it, and I can do whatever I want with that money. You understand? So government agencies generating money, and then people taking those monies to do whatever it is they want to do. So like, okay, let us have a single account, and there was BVN that time, so linking everything, all accounts together. So once there is a revenue from a government agency or from a government source, whatever it is, it goes straight into the account so that people don't create maybe ghost accounts on behalf of government and then be stealing from them. So that was also an initiative that was, um, developed, or let me say supported by the Central Bank of Nigeria. All right, so then we also have tackling developmental issues, e.g., cashless policy. In 2023 now, a cashless policy is seriously on, like seriously intensified. It has been on for a long time. So it is okay. It was aimed to like bring in people that were unbanked, because as at last year, the Central Bank of Nigeria was saying that there's like money supply, the money outside of the banking system in Nigeria was about 2.8 trillion naira. So it's like a lot, maybe up to like 60, 70, 80% of the total money supply was outside the control of banks. So how do you implement an effective monetary policy when you don't even have control over most of the money in the economy? Okay, so the cashless policy was like kind of, it's been enforced, so not just ordinarily being implemented, it's been enforced, and people have been asked to return their old notes to the banks, to commercial banks, and we've been doing that. Those that have money, okay, I don't think I return any old notes to any bank anyway, but those that have money have been returning the money, and you know, so there are a lot of things that cashless policy is going to help Nigeria's economy with. Number one, people operating in the informal sector who didn't have bank accounts before now would have to, own bank accounts, and through that, the government can be tracing their money, their cash flows, and then you know who to tax and how much to tax them. So it's going to help Nigeria to generate an increase in the tax revenues. So a lot of people that are not paying taxes now because they are not banked, by the time they become banked, so government can tax them. Okay, this is what you earn, this is how you spend. Okay, so a part of this should be going to the government instead of the tax evasion that a lot of people are doing. So cashless policy is going to reduce tax evasion in the Nigerian economy, and that's one. Then number two, prevent vote buying. This is an election period, and I guess the cashless policy right now has been intensified for political reasons. You understand? So now it's looking more than economic reasons. It's more or less like for political reasons. So here, election is coming, is getting closer, and vote buying is a regular feature of elections in Nigeria, and there is a high possibility of vote buying in the presidential elections on the 25th of February this year. This today is 10th. Today is 11th. So like in 2 weeks time. Yeah, I think that's 2 weeks time. Yeah, that's good. In 2 weeks time. So the government does not want vote buying to occur. So when all of you have brought in your money into the banking sector, and now the government also implemented, I think I mentioned it now, 20,000 naira uh, withdrawal policy. All right, so that's the highest that you can get. If you want to go over that, you are going to be paying, 3%, 5%. Um, to me, it's looking like a tax. You understand? And then it's not just that you'll be paying 3% as an individual and 5% as a corporate body. It's also the fact that you'll have to be presenting some documents. So the process might not be that easy. You understand? For you to get, a lot of money in cash form, because you need cash for vote buying. So the government is taking that cash out of the economy. You understand, through its cashless policy. So, and vote buying is also, when vote buying is limited or eradicated in a country, then that helps with the election process. That also contributes to the economy's, development now. You understand, positively. All right, it's the cashless policy is also to promote bank inclusiveness. Okay, I've mentioned it's bringing the bank into the banking sector, and it's also reducing bank's operation cost. Now you don't have to be moving cash around, all right? You don't have to be moving cash. So the cost of moving cash around, the cost of sorting currencies into different denominations, all of those things are, reduced or eliminated. So now it's more of moving numbers. All right, so you transfer these numbers, 5,000 at somebody, so like they are moving numbers. It's not like they are really moving cash. So once all of those costs have been eradicated, because in 2012, for example, I think the governor of CBN then was saying that it costs banks 192 billion naira, okay, to manage cash. Okay, it was costing banks 192 billion naira to manage cash. So now, if we take cash away from the economy, and more people are now getting to rely on bank transfers, online banking, and stuff like that. So that amount is eradicated, and once it is eradicated, then we expect service charges to reduce, because one of the things they said was that service charges are high because banks have to make profit, and they have to, this operation cost, the cost of managing cash, has to be paid by somebody, so it gets passed on, to customers, and customers have to like bear in terms of high service charge. So we expect that this cashless policy over time is going to reduce service charges in Nigeria that's attributed as that follows online banking transactions in Nigeria. So those are some of the contributions of the banking sector to Nigeria's economic growth and development. Now, challenges the banking sector have challenges just like every other sector. Number one being the challenge of inadequate infrastructure. Right. So here, what I mean by inadequate infrastructure is that, for example, let's talk about the cashless policy that's going on right now. Right. So now we are trying to pursue a cashless policy. People don't have cash. People are stranded. Like there's a serious problem going on right now. You want to transport yourself. You don't have cash. You want to transfer your online bank apps are not going. Now, before I recorded this class, tonight, yeah, I'm recording it in the midnight, like usually as I usually do. Right, two people have sent me money. They've been debited. I've not been credited till now. Or maybe when I check my phone after recording this video, you understand? So I've not been credited. So you have things like that. Money being lost in transit. Somebody sends money, the other person does not get it, and so you have to go to the bank to complain and complain like that. So you are pursuing a cashless policy, but a lot of people are not being able to use their bank apps. Yes, right now I don't even I think Zen's bank apps are even really working during the day. People say that it works at night, at midnight. So, but during the day, like you can't really get to do anything. So, and there are other bank apps too are like that. So you want to use USSD, it's not going. You want to use your bank app, it's not going. So, like if your infrastructure is adequate, all of those things are supposed to be seamless, especially for a country that is intensifying its efforts at cashless policy. Understand? So, like you have those things there, inadequate infrastructure. Then you have issue of fraud. See, fraud is getting so, especially with Zenith Bank. A lot of reports now, and the funny thing is that in 2019, when I was writing my final year project, Zenith Bank happened to be the best bank in Nigeria, and I think one of the top five in Africa. You understand? But this is 2023. Barely how many years later, Zenith Bank is now the worst bank in this country. If you have money in Zenith Bank, go and just go and remove it. Yes, if you that's even if you can. Understand? Because people are being people's money are being stolen against stolen. So you see people getting to tag Zenith Bank on Twitter. I know Twitter is a powerful tool. I don't know if Twitter is going to be existing in that by the time we are watching this thing. But Twitter, a social media app, is a lot of people like having to tag Zenith Bank, you know, Zenith Bank official handle. They are reporting their cases. We've reported to this, we reported to that. Nothing is being done. And when your matter gets to Twitter, for example, it can send you out of business. But Twitter is such a very powerful social media. That is something that is helping nations, you know, in terms of elections, in terms of who wins a presidential election or not. So don't just let your matter get still in a negative light. So people see people $10,000 went off my account, right? 4 million naira just went off my account and stuff like that. And you have your ATM with you, you were not compromised. So like what's going on? What's going on? That's a lot of people like multiple reports, and the issue now is as at this February 2023, like if you just have money, don't go and take it. Well, we are all expecting, a lot of people are expecting that these issues are going to be resolved as quickly as possible, to ensure that there is a customer confidence in that bank. Now, for example, not that fraud doesn't happen in other banks too, they do. Understand? So we have the issue of fraud. So the banks have to be tackling the issue of fraud every now and then. Hackers, Yahoo boys, whatever, trying to threaten the security system of banks on a constant basis in order to like cash out, steal money from them. So you also have the issue of weak corporate governance. So when banks are not being properly managed by those that are supposed to manage them, so you have issues also coming up. Sometimes maybe customer complaints, you complain and complain, nothing is being done. So why should that kind of thing be? All right, why should it be? You come today, come after 48 hours, come after this to be resolved in social amount of days, nothing is happening, and then you keep coming and going, and the people in charge of customer service are still there, they still have their jobs, and you know, I wrote on customers relationship management of First Bank, and that was what my project was about then, and it wasn't good, and people still complain. But what I even got to realize was that it's kind of through all of the banks, it's kind of a common occurrence. So people are just like, They're just using the banks for the sake of other things, not because they are satisfied. Understand for the sake of other things. So you have those things going on. What are banks doing about it? Your directors and whatever, what are they doing about these issues? Right, so you have false disclosure and lack of transparency about banks' true financial position. So this was part of the things that contributed to, the financial crisis problem, the financial crisis that we also had to suffer in this country, because your bank is in trouble, but you are trying to position it as if it were doing well. So instead of people, instead of those that could save your bank to come in and save it, they are trying to, like, camouflage the real issues, and that eventually leads to your bank failing, you know, over time. Then you also have loss of customer and public confidence. Like for example, right now, the issue with people not having cash to spend because it has been there's sabotage that's going on. Okay, the new notes that the central government has printed is not, people don't have the new notes, and they've taken their old notes to the bank. You understand? They are trying to make transfers. Transfer is bouncing. They can't do it. And now I was at First Bank yesterday morning, one of their branches at UI. We had to queue under the sun at the gate. The gate was being locked against us. You understand? And they open it a little bit, allow some people to come in, close it, something like that. Why should that be? Bank is where you should walk in freely and do what you want to go and do. So all of these things are just making people, you know, not like banks again in Nigeria. And I think in my mind, I'm thinking that this cashless policy, although it's a good one, but with all of these challenges, it may not eventually work, because once people lay hold of cash, they will not just go to the bank again. Because you don't want to go through this kind of stress again on top of your money, like my money. So it's not somebody is dashing you money, but it's your money and they are being stressed this way. You understand? So once you are able to lay hold of sufficient cash, people might just be keeping their money abroad, which is going to lead to another problem again, problem of robbery and stuff like that, which the cashless policy is like aiming to solve. It's also solving the problem of kidnapping, because a lot of, I think I mentioned it during transport sector, a lot of kidnapping going on and people having to pay ransom in cash. So, but now that cashless policy is being you know implemented, how would kidnappers, what would they do? So we ask you to transfer 40 million naira to them for ransom. Of course, that the money will be easily traced that way. It's went from this account to this account, so they can be apprehended, which is one of the things that the CBN is looking at and the federal government to curb um, kidnapping. But I just think that these monetary policy tools they are they are trying, but maybe they are not the real thing that the government is supposed to be doing. You understand? Maybe the government is not tackling the fundamental issues, like why are people kidnapping in the first place? Have you solved the problem of unemployment? Inflation in Nigeria is about 23%. Unemployment right now is about 30 something percent. Like a third of the labor force is unemployed. And that does not mean the rest are employed. So a lot of people are underemployed. You understand? So, like, have you tackled the source of kidnapping? Have you done some things? Are your institutions strong? Especially the ones that deal with crime. Are they strong? Have they not been compromised and stuff like that? But it's all good. So we also have high operational costs due to cash money. I've spoken about this already. Yeah, then Japa of skilled workers. So this is the Japa era now. That's the language that we use in the own period. So where people who are skilled in Nigeria, highly skilled and are highly trained, they are leaving the country seeking greener pasture. So that's a lot of that is happening in the banking sector. Managers leaving to go and become cleaners, or to go and start a program in the US, in Canada, and from there they develop a better career, earn better for their skills and stuff like that. A lot of it, and I think even Zenith Bank that I was talking about earlier, I think that is what is affecting it. A lot of their skilled personnel they've gone out, and probably the bank in a hurry, okay, has employed people that are probably fraudulent. So in their dealings, maybe that's what happened. You understand, but the truth is, a lot of people are leaving, especially the banking sector, the health sector, IT. All of these IT guys, they are just leaving the country. They are japping. And it's leading to problem in Nigeria. Okay, so these are challenges. Now, have what has the banking sector done so far? Number one, establishment of EFCC in 2002, at Economic and Financial Crimes Commission, in order to combat fraud. All of this fraud that is happening over the internet, so money going out of the bank account. So in order to tackle of these things, find out who did it, get the money back if you can, and let the government take care of putting them in prison or whatever. All right, then number two, you have the Security Exchange Commission was established in 2007, okay, to help regulate the capital markets where money and financial assets are being bought and sold. All right, so you have some schemes coming up, for example, and then maybe MMM or all of these Ponzi schemes. And one way to know that they are false is if they are not registered with SEC, all right, Security and Exchange Commission, and other bodies too. There are some bodies like that, that they tend to bring money. They won't tell their Ponzi schemes anyway, but it's until you put your money inside of it and then over time you disappear billions of naira, like you're in trouble. But one way to check is, okay, do they have anything to do with SEC? So if they have something to do with SEC, then that means you can still trust them. Not like you can trust them like with the whole of your heart anyway, the way things are going, but you can still trust them. You know, that okay, this is real, this is legitimate, you can do stuff here. You understand? So you have a lot of financial platforms, trying to seek, approval. It's not always approval, like you just want you want to. I think it's approval, the approval of sector, so that um the public uh, the public has confidence in, in your brand. You understand, in your company, that they can, freely transact using your platform. All right. So you also have a TSA, the Treasury Single Accounts, which was implemented in 2015 to fast corruption. I've explained it earlier. Then you also have the cashless policy. I've explained it. These are things that the government, the things that the banking sector has put in place. Then they also have handsome remuneration packages for banks, full-time workers. This I'm not talking about contract staff here, because the banks used to have contract staff. I'm not sure those ones are paid handsomely. I don't think they are also. Um, I don't think they are entitled to some, remuneration packages. Now, I'm not even talking about just pay here. I'm talking about other benefits attributed to the fact that you are working with the banks. So banks are, because a friend of mine, for example, now working with Access Bank, they are, I think that first they are going through maybe a 3 to 6 month training that the bank is fully responsible for, and then they still get after that, they get indoctrinated into the system, and the pay is handsome, like to me, but to them the pay may not be handsome. Any maybe like uh, 200,000 stuff like that. You just that you're just starting out. You understand? So the pay is handsome, right? So banks are also doing that, okay, training people, and paying them well to ensure that at least to lower their labor turnover rate, to ensure that people stay, like their workers stay with them. Understand? But people still leave anyway, and but banks keep trying to do what they can do to ensure that people are, staying. Sometimes they will even have to raise the age limits of employment. Maybe before it was 24 and 3 years, 24 years old. But I think for 24-year-old graduates, it's 3 or 5 years experience. When you want to get it, when to strike, has taken like 3 years of your academic time at the university, prolonging when you're supposed to graduate by 2 3 years. So where would you graduate at 24 and have like 3 or 4 years banking experience? So maybe sometimes you have to just relax these things and consider the issues, you know, the developmental problems in Nigeria. Okay, and just relax these things. So maybe increase the age limit to maybe 25, 26, and still try to reduce the experience requirements, instead of 2 3 4, maybe 1 year and stuff like that. Bring people in, train them, pay them well, and just put some things in place too to ensure that they stay. You understand? If they want to leave, you know, they also have to bear some costs if they want to leave. At least it's better to just put things in place that make them, stay. All right. So with that, the next thing that we're going to talk about is your assignments. Okay. So I'll write that in a bit. My time has really gone. So your assignment number one is the central bank. It is central bank under the Ministry of Finance. It's the Central Bank of Nigeria, please. The Central Bank of Nigeria under the Ministry of Finance. All right. So you have to state your reasons. Okay, is it under it? Is it not under it? Now, number two, what are the banks AMCON has rescued so far? So tell us when. What about those banks? When did AMCON rescue them, or when was AMCON used as a vessel to rescue those banks. And number three, states the GDP contribution of the banking sector in recent years. So let's say the past 5 years, what has the GDP contribution of the banking sector been? So that's about that. And we meet when we meet again.